Time, let's go to our featured guest of the morning. He's Ryan Bushell, President and Portfolio Manager at Newhaven Asset Management. Ryan, thank you for joining us.
Thanks for having me, Paul.
So, as I said, the call from economists on those inflation numbers, which are less than half an hour away now, is for headline inflation to come in at 4.0%. That would be exactly the same as the August number. The CPI core median, the core number median version, also expected to come in at 4%. That would be down slightly from 4.1% in August. Not a lot of movement, in other words, in inflation.
Yeah, and important to note that 4% is still double the target, right? So it seems great compared to where we were a year ago, but we're in a situation where it's going to be hard to get that last 2% without what I would say is a pretty significant recession is the only thing that's going to take us down lower.
And do you think the Bank of Canada is likely to raise rates? What's your call?
I think it'll depend a lot on what the number comes out at 8:30, right? I mean, that's going to be the most recent reading. I think they would do everything they can not to hike. I think they are very content to allow this to play out. However, if inflation comes out hotter, that's going to put some pressure on them.
There you see the Canadian dollar. We'll watch it, of course, at the release of those numbers as well. Economists at TD Bank expect some good news for consumers in the numbers. Food prices are expected to post their second consecutive monthly decline, mainly based on a pullback in fruits and vegetables, alongside some deceleration in food away from home, restaurant food. Energy prices should see little change. Both of those, of course, are excluded from the core inflation numbers. Do you think a recession in Canada is inevitable, Ryan?
You know, it's interesting. You hear both in Canada and the U.S. all this narrative about a soft landing, and that's what the central banks are going to tell you because they don't want to say we're trying to put the economy into a recession, right? So, and obviously that would be their best case scenario. But I think in a world where with this much debt outstanding, with rates having risen this quickly, the long and variable lags that you always hear about as it relates to monetary policy, it's uncertain as to the outcome, but it's going to lean towards recession versus, continued growth. It's going to be soft landing at best case or recession. My base case would be a moderate to severe recession, actually. I do think that it's been delayed, not avoided, but a lot will depend going forward on, one, these geopolitical tensions, and two, if and when central banks pivot.
How influential would a Canadian recession be on the type of stocks that you invest in for your clients, the dividend payers?
Yeah, so, we do our best to have companies that can survive anything, right? So we are trying to own those very sustainable cash flows that are dependable, market up, down, or sideways, economy up, down, or sideways. So utilities, telecom, these are the last type of things that people will cut. We are underweight the banking sector in Canada relative to the Canadian market, which has a pretty high weighting in banks relative to other markets in the world. So we're not saying that we're underweight relative to a global benchmark, but certainly relative to the Canadian benchmark, as we think that'll be the sector that faces some of the consumer pain. And we own almost no consumer or technology stocks, which, again, we think based on either valuation or just based on their cyclicality and their exposure to the consumer are exposed. So we're doing our best, but obviously a moderate to severe recession will impact all markets, financial markets globally. It will affect oil prices. And again, we do think that it's somewhat inevitable given where we are at on monetary policy. If we got a major pivot and a major stimulus measure, like we did in 2020 or like we did following the financial crisis, then that changes things. And so you have to be we are in a policy-driven world and a policy-driven market. Do
you think the Canadian bank stocks, which are well off their highs, are pricing in a recession?
I would say that they are somewhat. Yeah, if you look at, I was saying this to clients, I was out visiting clients yesterday, and just to pick on TD Bank for an example, coming out of 2021 into early 2022, out of 2020 into early 21, the narrative was COVID is over. We are going to see the economy reopen. We have now higher interest rates. Consumers are in good shape. Balance sheets are in good shape. So the net interest margins are going to expand. They're going to make good margins on lending, and lending will continue to be strong. Going forward from there, the shares are off 30-ish%, 106 down to about $80, right? That's TD and other banks similarly, some worse, some better. TD's kind of in the middle. So yeah, I would say that is pricing some weakness. However, at these prices, we look at things and go, what's going to be the catalyst to the upside? The only thing that would really push us to the upside again is that policy pivot stimulus. We think that if the economy is allowed to play out kind of how it is, where central banks are boxed in by the fact that they can't cut rates without raising inflation, that these higher policy rates are eventually, going to pull down the consumer, going to raise defaults from incredibly low levels, and that will put stress on the banks as far as their earnings numbers go. So we're looking at that and hoping for a better chance to buy some more lower.